Traders and investors, welcome to Friday's edition of Benzinga's Pre-Market Prep, brought to you by the good folks at OptionsHouse. Jumpin' Joe, how you doing this morning?
Good morning, Joel. How's it going over there?
I'm almost recovered from a very terrifying experience at Trader Joe's.
Oh, is that a fact? What happened? I
Ah,
I go there all the time,
uh,
and I've never had a traumatic experience.
well, you know how Lisa asked me to pick some wine up on the way home for her?
Yes, I do.
Okay, so I go into the wine section, and I said, hey, I asked them where the Riesling is, and they pointed to me, and I'm kind of weaving and bobbing in the store, and there's a guy standing next to me, and I don't think it was my fault, but I kind of bumped him, and his cart hit this huge stack of wine bottles.
Come
I
on.
and I'm like, no, and you just hear them start to clang and everything, and the whole display.
Come
I
on.
swear to God, I just saw the whole thing just right in front of my eyes. I didn't try and grab any of the bottles or anything. And this whole display of about, I don't know, 50 to 70 wine bottles come crashing down. And the guys, standing there, and there's
They all break too, like
oh, they
smash,
all
smash,
broke and it's
smash.
shattered all over the place. And the guy's standing there, and, just in just like a pool of wine, and everyone's going, "Are you okay? Are you okay, sir? Are you okay?" And I'm standing there, I'm going, "Where's the Riesling?" Because the floor was flooding, and I didn't want to get my shoes dirty. And this lady looks at me, she's like, "Where's the Riesling?" I said, "Yeah, I want to get out of here." So she grabbed me a couple. I ended up grabbing like 5 bottles. I needed a drink after that, and
Okay.
uh, and
A
then
lot.
that must, you know what, that must happen there a lot because they just came out of the woodwork. Like 6 people just came out. They had this big mopper thing, and I almost stayed to stick around to see them, clean it up. But
Joel, that sounds like what we so fondly call in the biz a Larry David moment.
oh my God, I tell you, the poor guy, he had wine on his pants and all over the place, and it was
And
just
and you're just standing there going, "Where's the Riesling?"
exactly. It was, and I'm like, I didn't do that, did I? Because I bumped him a bit. He goes, no, no, my car just got caught up. But
But they do stack stuff kind of stupidly in there, like they kind of ask
Yeah.
for it. Maybe that was all the wine they wanted to get rid of.
oh, I don't know. But it
It's
was
just like the Whole Food apples, when they stack the pyramid of apples. There's of course going to be a kid every other day that pulls the one from
Pull
the
the
bottom.
lowest one.
Of course.
Yeah, so they must fall every day, that pyramid of apples.
I don't
The
know
apples are
if
probably the worst apples. They're probably all bruised up.
it was a terrifying experience.
I
But
was thinking about the Seinfeld episode where Costanza's got the huge Teflon jacket and he's walking through the wine place and he smashes a bunch of bottles over with his huge Teflon jacket.
it was very similar. But Dennis, we got to move to the markets here, and boy, we got so many divergences going on here. I don't. I guess we started with
I
the S&Ps, huh?
I don't know. There's stuff up, there's stuff down, and the S&P futures are getting whacked. And I'm blaming Europe. I'm blaming Europe this time. We got all the European banks are getting whacked here this morning again. Remember back 2011 or was it 2012? Every day the European banks would all go down, and then we'd follow suit. And well, you got a lot of European banks trading lower here this morning, led by Deutsche Bank, which is actually, I think, did it get a downgrade there, Brent? Deutsche Bank? It's down $2.
Yes, they
DB.
got a downgrade at Barclays. Let me confirm that.
Um,
Yeah, I got it. Barclays.
Okay.
Dennis, that's actually a pretty good point. Because we closed 84. Where we closed 81 and a quarter.
Mm.
Yesterday we had that high at 93.75. But what happened is that dip occurred. What time does Europe open here? It's right around 2, 3 o'clock in the morning,
I think it's
right?
like 230 or
Yeah,
something.
yeah, and we were trading up and around the 1780 level, at that time. So, as goes Europe, as goes the S&P. So that's good timing on that. We just got to alert our traders that we have hit the low of the recent move. 1764 was our low on Wednesday. That has been the low on
Kissed it.
the. Yeah, kissed it exactly. But Dennis, we're bound to take it out, and I'll just give you two more support levels. 1760.75 was the low on the 18th. That is a minor support point. And the other minor support point is 1754 even. Those are your two minor support points. And if things get really ugly today, which they have the potential on a Friday, You have a low at 1748 on November. That's only 17 handles away. Do I need a number lower than 1748?
First of all, why do you think we have to take it out? Why do you think you already said we're bound to take out the 1764? Right now, we're still 2 points above there. You could call it a double bottom.
Just because the bounce theory. You know, when it hit this level on Wednesday, you got to bounce all the way back up to the 1790 level. You got near that area on Thursday, 67.75. You got a wicked bounce off that level, and now you hit it again this morning. And since
You're
you've
telling
hit
me
that,
it's not going to bounce anymore.
yeah, yep. Since it hit, I mean, you did get it. You hit 64, then you got to bounce up to 72, but we're right back down. So I just think, you know, when we talk about the high frequency trades and when you open up near a big order and it's close to it, it has less to travel. So I think they'll test it and take it out.
A lot of your financials are weak here in the pre-market. When you do see the European financials weak, it does flow through. So I think this sell-off is going to be led a little bit by the financials. You've got JP Morgan trading down 80 cents right now here in the pre-market. That's a big move for that stock. You got Goldman Sachs trading down $2.50. You got Morgan Stanley trading down 50 cents. You got Citigroup trading down 65 cents. You even got BAC participating. It's down 25 cents. So it looks like it's financial to be relatively weak here. We just had MasterCard actually break here as well with earnings just about 3 minutes ago. They missed, and they were leaning the wrong way on this one on MasterCard because MA 57 cents versus 60 cents and 2.1 billion versus 2.14 billion. Miss on the top, miss on the bottom. After hours last night, they kept buying this thing up to 81, 81 and a half. This morning, before the report, they're buying it in the 81 handle, actively trading up $2. I was like, well, what do these people know? Obviously, they knew nothing because the stock is going the other way on the miss. It's now down at 76 and a quarter here. $76 actually, just almost its best bid here at now. The low of the move has been 74.95, which we hit back there just about 4 trading sessions ago. So it looks like we're going to test that maybe in the next few minutes.
Yeah, 76 even. You made a good point to 74.95. Below that 74 level. You do have another. Wow, you had a bunch of lows at 74.70, 74.41. Boy, that's a critical level, and you hit 74.95. After that, you could be trading under 74. Get down next support level would be 73.46, and that was from the 14th. But how about it's probably not going to come up real well on this chart. But how about all the people that piled into this after it split 10 for 1?
Yeah, definitely. And that's what historically, and now you got to say we had a market sell-off. There was some other factors here. So when you look back at the statistics here, it's going to help the statistics that stocks are weak post-split because this one is just a classic example. But the market sold off there. You just had an earnings report, so there was other reasons for the weakness as well. But you can't argue with it. If you were selling this thing right after it split, you sold it probably up around $83, and you're pretty happy with that sale right now.
Just one other thing too here. You know how everyone talks about the January effect?
Mm-hmm.
Whew. What do you think the effect? Look at the effect we've had on this January. I mean,
it hasn't been a good January thus far, that's for sure. We came in here, everybody didn't know stocks could go down anymore. We've had 2 years where we were up, what were we up, like 27%, 28% or something consecutively the last 2 years, 2012 and 2013. I think everybody forgot what sell-offs feel like. And we struggled up there. We struggled at that whole 1840 area forever. 3, 4, 5 times gave you the chance to sell it up there. And now we're almost 80 points off those highs. So everybody's getting a little bit of taste of what it's like to take on some risk.
So how much are we down for a percentage so far for January?
I'll do the quick math, Joel. Can you do it there? 65. Your air math's always better than mine anyway. So you got, what, 75 points on 1840? Was that 4%?
Yeah, but just 4%. So if you multiply that by 12, we could be down close to 50% this year.
What do you mean? Where are you getting multiplied by 12?
We went down.
You're going to go down 4% every month? Is that what you're saying?
I'm just talking about the January effect.
Holy cow, Joel. The bear is back. Joel's bear. He's out of his cave, folks. He's out of hibernation. He's back. He's loving it. The bear is back.
Okay.
The bear is not back in Google, though.
How long?
You were all excited there after hours, right when it reported and dropped 50 points. He's like, Joel's like, yeah, or 40 points. I called this. It came all the way back, and it's up now.
You know what? The premiums in these options absolutely scared me. I did not want to play them at all. There was just implied volatility, whatever you talk about, it
Yeah.
just wasn't there. But anyways, talk about the action.
Well, it reported earnings right after the bell, 1201 versus 1224, and the revenue real light, 13.6 billion versus 16.72 billion. Is that right? They missed by 3 billion. Brent, is that the right number? Am I having that right on my sheet?
That was the right number. However,
Oh.
they you got to remember that Google does the excluding traffic acquisition costs, and
Alright.
usually that's the number that the analysts look at. But maybe this time they were not accounting for it. I'm not sure.
In any regard, on those initial numbers, the stock dropped 40 points. We went all the way down to 1095.67. So huge sell-off right off the bat. It did not last long. It spiked it right back all the way up, and now we are up 45 points. So we have had an 85. Well, actually, we got up as how high did we get, Joel? After hours there now.
We got up to 1194.
We had a 100-point range, a 100-point range after hours on this thing. It went down 40 and then up almost 60. So and now it's up 44. We're trading at 1179 right now. It wasn't all bad news though. They did announce, and they've been talking about this for a while, a stock split. Gonna happen April the 2nd. Interesting split though. They're going to issue a new class of shares to everybody that owns the Google shares prior to the post-split date there, prior to the ex-split date. They're going to issue a new class of shares, non-voting shares, though. So it's going to trade under two different tickers. We're going to have Google, G-O-O-G, and let me just go and get the report actually on this. So we're going to have Google, G-O-O-G, and that's going to be the Class C shares that are not going to have voting rights. And then there's going to be a new class of shares, Class A shares, G-O-O-G-L, it's going to trade under, and those ones are going to have voting rights.
If you pull up the official release that's on Google's site, it's like the third paragraph in that release, Dennis, where they're talking about the dividend, the distribution, I guess is a better way to say it. Record date March 27th and dividend payment date of April 2nd.
And what does this accomplish?
Well, they're trying to keep control. I mean, you've got the two top shareholders there, the co-founders, Larry Page and Sergey Brin, who want to keep control of the company. They own 56% of the voting shares right now, and they want to obviously keep those voting shares. So I think it's just a matter of them keeping control and keeping power. They don't want to dilute their own shares, and so they're going to have their own shares. But they already have their own Class B shares. So I'm getting all confused with all these Google classes. So because they own Class B shares, and those have like 10 times the voting power of the Class A shares. And now they're issuing Class C shares with no voting rights at all. So it's all kind of confusing. But bottom line is, after the split date, you're going to get another share. So basically, the price will probably get cut in half. You'd think the voting shares would trade with a little bit of premium to the non-voting shares. But then there's this whole lawsuit thing here too. Basically, they've said, and I don't know if I've got this in front of me, but just the gist of it all is that if the voting shares trade at a premium, a significant premium to the non-voting shares, then they're going to have to pay up to $7.5 billion to shareholders or something.
What?
Yeah, it's all confusing, man. This is
This-
the craziest release.
If you take the Mastercard thesis into account here, like after the split, I mean, first of all, if they're doing this, couldn't they take it down to a $50 stock if they wanted to do the split anyways?
Do like
You
a
know,
10 for one or
Yeah,
something?
do a 10 for one in at least one of them. You know, the one, I mean, probably the one that's still privately held, that probably won't trade as much, right? Because
You would think not.
you
Like, I
would-
mean, Viacom, you look at Viacom, for instance, you have VIA and VIAB. They have the same thing. They have two classes of shares. One has voting rights, one doesn't have the voting rights. The VIA, which is actually the thinly traded one, is the one with the voting rights. The VIAB is the thicker one, and it's the one without the voting rights. But those two shares trade pretty much at the same price. They're both right around $84. So I think that's what Google's assuming, is that both of these stocks, once they have these two shares, are just going to trade very close to each other because they get all the earnings, they get everything. They just don't have the voting power.
you think there'll be some arb going on in those two?
Yeah, well, there's always the share class arb between the two that will keep it in line. So you get the high frequency guys. See, they're good for some. The high frequency guys always keep it in line, this kind of stuff. And I used to actually, this is something I did in 2004. I just basically did this dual class arbitrage between VIA and VIA-B. I was doing that, Joel? I was almost doing that exclusively. I would just, basically, when the VIA would move a nickel or a dime away from the VIA-B, I would buy the one and sell the other and wait for them to come together. And then I would take it off. And I was sitting there scooping up nickels and dimes for basically the entire year. And I actually made my whole year just doing that.
Yep, I
I
remember
can't
that.
do that anymore because the high frequency guys are just too competitive. I just don't get filled. Basically, I'm trying to go for a nickel or 6, 7, 8 cents. They're getting in front of me and they're getting the 6, 7, 8 cents. So it's just too difficult to do that. It's too difficult to beat the computers now, really, in that game. So assuming the computers are going to come in here probably on the Goog and the new Goog L, so GOOGL, when this does happen, and probably keep the prices in line. So, and obviously the shareholders of Google, the main two guys, are banking on it because if that doesn't happen, they're saying they're going to pay some $7.5 billion potentially to shareholders.
Dennis, you also did that when we traded in teenies. So,
It helped.
yeah, the margins. Now, the people that
Yeah.
are probably doing that spread are scraping out half a pennies and pennies because
You're
of these.
probably right.
Yeah,
Yeah, you
because
get
of
the
these.
high frequency traders. They can go in there. There's a half cent sitting there. They're going to go pick it up. Their costs are so low.
Right.
Um, so exactly. So their costs are basically nothing. So if there's a half cent there, there's a half cent there. They don't have to consider commissions or anything like that because they're just so low. Their volumes are so high. And
You
even if they scratch trades, off the rebates, they can even make money. So
And actually, Dennis, your discussion that we had on the show yesterday kind of discouraged me, from buying the puts here. Even though that would have been the discouraging thing. You would have bought puts based on them missing. They miss,
yeah,
and now going up. But what about trading this thing? I know every once in a while you like to dabble in this thing. You just gonna let it move around on its own today, or you gonna try and take a stab if it gets up near that 1194 high?
I think I'll probably let the dust settle here a little bit, try to get a feel for it. But if it starts, you're right. If it starts getting up that 1194 area, I might get, I always like to log the pre-market highs and the pre-market lows. Obviously, 1095.67, I think, is out of play. I would hope so
New low in
anyway.
the S&Ps, Dennis. New low in the S&Ps.
We are in trouble here, and the European banks are on their lows, and it looks like it's going to be a financial sell-off. We're down now 90 cents on J.P. Morgan. I'm going to my J.P. Morgan indicator, and that's not pretty. But it does look like the tech stocks are going to be, holding up a little bit stronger with this Google being up 45 points. But I don't know if we get dirty in this or not. It gets up to 1194, maybe I'll think about it, but I don't know. I don't
What
really
about
know why
trying
it's up
along? What
46
about trying
points.
along?
I'm trying it long up here. I think it's a little bit ridiculous that they reported that bad of a quarter and it's rallying this much. The split helps maybe a little bit, but I still don't really know if I'm a fan of this long term. Like I was saying yesterday on the show, long term, I think it goes higher. But 45 points overnight on that report. Ooh, if I was a trader, just a trader in this thing, and I had a swing trade on, I'd be ringing the register on this one.
I was just gonna say that. I was hoping Joanne was gonna pop in because she nailed that Netflix move with the 360 calls. I was hoping she was gonna come in and say that she had the 1160 calls on this. So I mean, if you did, and you're getting in, next week we're gonna have Steve Clausen on from OptionsHouse, and we're gonna discuss on these weekly. When you're playing these weekly options, you gotta have an exit point, because there's a lot of premium intraday, especially like in a stock like Google here. I mean, it could be at 1180. You blink an eye, it could be at 1170. Off
Oh
the
yeah.
and then
Oh yeah.
yeah, then right back up. So have a target, have a place where you want to get out and use it quickly, because those weeklies. I mean, I'm sure there's some open interest, and you got people that open interest in the 1140 calls, 50 calls. I don't know what they go. Do they go every 2.5 cents or every nickel in that? But there's a lot of people that if they took a shot on these out of the money calls going into this number, there's a lot of people sitting on some huge profits here. So be interesting to see. I definitely would see what happens off the open here. That first couple minutes of trading will be important for Google.
I'm looking at the weeklies right now. They're interesting. They go $2, $3. So 1105, 1103, 1100, 1098, 1095, 1093, 1090. So now they don't do the 50 cents, but they go $2, $3, $2, $3, $2, $3.
Huh.
So it's kind of interesting.
Okay, well you should, and everybody that has puts is obviously gonna be worthless.
Yeah, and just to point out that straddle. So basically, if you were to buy the put and buy the call, it was $65. So they were pricing in a 65-point move off of this. We've got 45 points on the upside here now, so it's starting to get to a point where they could almost be at break even. I guess if you were playing it perfectly after hours and you bought, there was a 90-point range, so I guess they had the volatility priced right. It just was in both directions. So 65 points was the projected range from this earnings report. So actually, the range is higher than that. Let's go on here. Amazon also reported earnings here, and they are getting beat up. And usually this is rare. Amazon often reports and misses, and they usually rally on it anyway. So here's Google taking up Amazon's normal, what Google rallying off of their poor earnings report. Amazon is actually selling off on their report. 51 cents versus 66 cents. 25.59 billion versus 26.07 billion. Q1 sales a little bit to the lower end of guidance. This is what's probably really whacking it. 18.2 to 19.9 billion. Analyst estimates are up at 19.7, so it looks like it's probably going to be a little bit lower. Stock is down 7% right now, or 31 points.
352 low. It actually had a spike up originally. The first reaction by the high freaks was to take it up to 406.40, which if you look at the dailies, we had multiple highs in the 405 to 408 area. So once it got actually through that resistance, wow, how did it get higher than 410 here? Oh, that was right after the number came out. What the heck was that?
Maybe that was right before. Was it right before or right after? Because I don't know who would be buying this on a news algorithm.
414.89 is what it spiked up to, and then it spiked all the way down to 352. Just kind of a slow melt here. Kind of after the 352 high, got almost back to 395, and then they've had their foot on the gas after that. I would look this 370 area. There was a couple lows in the issue at 374 back in November. But the major support in this thing, I see a low at 360.45 on November 20th.
You know what number I like too is 380, because 380 we had multiple lows right there during December. I mean, you look at the chart when you go out to the last 4 months here, 380 just jumps out like a sore thumb. That jumps out as old support. We are through that now. We've traded significantly through that. So I wonder if we drift back up to that area, if you find resistance up there again. I know we cut through it in the pre-market.
Yeah, that's a good number.
But 380 is a big number. So I think that could be a good swing number there. I think it could reverse course if it does get there. The only thing you got to consider is that Amazon often, the bottom pickers always seem to come in and buy this stock. And it wasn't a good report. It was missed by 15 cents. But they always seem to come back, so I'm always hesitant to short Amazon just because it seems like shorts always get punished in this thing. But they are up 33 points right now, so if you short it, coming into the report, good job. You're up 8% right now.
You want to hear something interesting? And I know some of the listeners might not want to hear this, but remember when we had Ronnie Moss on a couple weeks ago?
Yeah,
Okay.
The ethics guy, right?
Right.
He shorted. What did he say? Which stocks?
Listen to this. He said short Amazon. Okay, I can't remember it was right around the 400 level. He said short Apple.
Yeah.
Okay, we know what Apple's done, and you know what else he said short?
Well, he said sell, I think, but yeah.
Sell, I don't think he actually made it short.
He wasn't recommending it short, but he was recommending to sell these things outright.
And you know what the third one was?
I remember the third one, Philip Morris, because he said this company should be at zero and should be illegal.
Exactly. So, I mean.
Ethics.
Yeah, ethics. Yeah, exactly.
He recommended selling all these companies on ethical concerns, and the market laughed at him. They had him on Fast Money, and they were all making fun of him on CNBC. We had him on this show. We didn't make fun of him. We were listening to what he had to say. I mean, I didn't know if I totally agreed that it should be downgrading stocks on ethical concerns, but we weren't making fun of him. And, wow, he was right. He's right so far. He's doing pretty good in these trades. So we were asking him, are you going to lose customers? Are you going to lose clients here because of these calls, recommending sell recommendations based on ethics as opposed to company fundamentals? Well, if it's coincidental or not, he's right. He's been right here.
Brent,
and he's up on all of these trades.
I think you were one of the people that kind of scoffed at Ronnie's predictions and stuff, huh?
Which predictions?
Ronnie Moss, when we had him on, he said short Apple, Amazon, and Philip Morris. Not short, sell. You were a little skeptical.
I don't think he is accounting for what's happening right now at all. That's why I scoffed. I don't think what's happening has anything to do.
Okay.
Purely coincidental is what you're saying, Brent. Purely coincidental.
I scoffed. I did scoff, and it was because his ratings have nothing to do with the stock market. I think what he was trying to get on the heels to do was awesome, like totally a courageous thing and everything. But what does that have to do with the stock market, really?
It's funny. Mosca says that we in the chat room were
They were making fun of him in the
yeah,
chat.
yeah, and he still thinks it being silly. So do I, Mosca. But
Yeah,
okay,
we were talking about whether we should make fun of him before the show on the pre-market, pre-prep show. We were
okay.
talking about, but we figured, we better let him make his point, and we wanted to hear exactly what he had to say, and he made his points, and I agree with you, Brent, too. I mean, it's purely coincidental here. He's downgrading all these companies on ethics, which has nothing to do with company fundamentals at all. We know over there that everybody's working for $2 a day or $2 an hour or whatever they're getting over at Apple. They're probably getting less than that. Apple's probably one of the ones that pays them more over in
Right.
China. So, I mean, is it right? Maybe not. But can you just say, oh, these companies are going down because of this? I don't know if you can say
No,
that
you
either.
can't. You
So.
can't. I just thought I'd bring it up. Okay, let's talk about the maker of Farms with Friends.
Farms with friends. Are you talking about Zynga?
Yes.
Farms with friends. Isn't that something you can come out and be a billionaire by creating some game that's called Farms? What's the game really called? I don't even know.
Joel
What
is
the name.
cracking us up. He's like, "What? What's that? What's that game?" I
Farms
think it's
with Friends?
Farmville. Is one of them.
Farmville.
They
Farms
have
with friends.
they have a bunch of Ville video games,
And
but
what's it? What?
I'm pretty sure they make the Words with Friends. That's what you're thinking of. Words with Friends, and you combine
Those
it
are
with
words, you're
Farmville.
combining them all.
I mean,
I
if
stole
they
you, Joel.
combined, you know what? If they combine those two games, now that might be something.
Has anybody played those games? Anybody over there in Benzinga? Has anybody played those games, or anybody in the chat play those games? Farms.
I
What?
have not.
Farmville. Farms with friends. Words with friends. I get it all confused
Words
here
with.
too. I don't play any of these
What'd
games.
you just say, Jake? What'd you call it? Words. Jake says there could also be a game called Words with Farms.
Oh.
Words with farms. And you know what? The stock would probably pop 20% on that if that was the case.
Well, why did it get the pop today?
Got the pop. Their earnings. Look at these earnings. They only lost 3 cents. They were supposed to lose 4 cents. So that's like 25% better. So that's why the stock, no. But they only lost 3 cents. Supposed to lose 4 cents. The revenue is great. 176 million versus 141 million. That is awesome. Getting a huge pop on that. They are also buying, what is this company they're buying, Brent? Natural Motion?
I haven't
do
looked
they
into.
do?
I haven't looked into that one yet.
They're buying some company, Natural Motion. That's from the Benzinga Pro. So I guess maybe that's, going to be their next game, maybe.
440. 440 pre-market high, kind of the similar formation that you had in the Facebook yesterday, where it hit a level in 3 different 15-minute brackets, sold back off to the $4 level, but we're right back up there at 425. So big move here, had a big move down from the $4 level, coming back. 440, you had multiple tops at 445 and 455, 452 back in late November. So I think if you do get back up to that area again, you should find some sellers.
Moscow's popping up in the chat here. He said he played the Farms with Friends game years ago. I did years ago during Halloween and turned the whole damn thing into a graveyard with a duck. And quit.
Great
Fake
work,
farming.
Masca. Great work.
Maybe-
Well
Fake
played.
Farming. You want to know something? I don't know what the other game is. My mother plays a game, and for Christmas she had the whole game decorated like right out, where she had like a Christmas fair carousel, Christmas this, Christmas there. It wasn't Farms with Friends, but it's one of those games, online games, and she's got the whole thing decked out. I go over to her house for Christmas, and there's no decorations in the house. It's all in the game. So she's taken. So all the decorating that she normally does in the house, she put in the game instead. So I guess maybe that's the new thing. Go on, you do fake farming or you do game farming. Maybe eventually people won't farm for real; they'll just do it in their video games.
Yeah, if you're doing good in the video game, you're doing good in real life, I think.
Is that how it works, Brent?
All right, the only person I know that plays the Farm Bill game is my nephew Hayden, and he's 7 or 8. So maybe we'll have on him as a special guest.
I think we should.
Okay.
We need to get some of these people that actually enjoy these Farm Bill games.
S&Ps continue to cascade lower here. 1761 and a quarter, Dennis. Just in a free fall here during the show. I just wanted to update on that. So what else do we got for earnings?
Mattel. Let's go to the toy maker here. Traditional toys not doing well. It's all about these games now here, because Mattel is down $4 right now, trading down
Whoa.
9%. Barbie dolls not in it anymore, I guess. $1.07 versus $1.20, $2.11 billion versus $2.37 billion.
Not good. Just made a low here at 38.60, getting a little pop up here, finding a little resistance in the 39 handle. This is, boy, had supported 40, said see ya to that. Take a look if you want to go back to the beginning of 2013, or yeah, February 2013, you had a low at 38.12.
Hasbro probably trading
I knew
down a
you were going
little
to
bit in
say that.
sympathy,
I
you would
knew you were going
think.
to say that.
You knew I was going to say that. I mean, the pair trading background behind me. 49.50. It's down a buck 33 right now. Actually, Hasbro went ex dividend today here too, so you got to adjust the close price. Looks like it closed 51.23. The adjusted close for the 40-cent dividend is 50.83. Anybody who took this one home for the dividend is getting crushed off of Mattel's news. So I guess when you're taking these dividend take-home strategies, you better make sure that a peer doesn't report the next morning, because this is what can happen to you. Stock is down $1.33 from the adjusted close at 49.5.
Not a good move here for Hasbro. Sympathy move with the stock. Has a gap to fill though, Dennis. Getting into a pretty ugly area. You got a gap between 49.65 all the way down to 47.35. So kind of getting in a kind of scary area here if you're an owner of Hasbro.
CMG, let's talk about some good news here, because the market's drifting down. But CMG, Chipotle Mexican Grill, flying last night, flying again this morning. Earnings $2.53 versus $2.53. So that was just in line, but the sales were great. 844 million versus 826 million. Guidance higher, and they're also talking about doing a stock buyback here. That has the
Wow.
stock trading up at this enormous, and I'm talking enormous level. 550 has been absolutely enormous for this stock. It topped out there twice in November, topped out there again earlier this year. We're getting right back up to that area again. Are we going to break out and make these new highs? We are in the pre-market.
We got up to 565, and then since we
Whoa.
came back down to 565, we're finding support at the 550 level.
Old resistance becomes new support trick.
Yeah, I call it very minor support though. And that coincides with the former all-time high at 550. So if you're a CMG bull and you want this mood to continue, I mean, it's hard to say that it's going to hold this 550 level because it's up $57. But below 550, I mean, holy smokes. It's got a long way to go to fill the gap. And here's another one, too. We talk about that scenario where something sells off into earnings and then you get it all back into earnings. I wouldn't be surprised if some people caught in this downdraft here since the beginning of the year use this opportunity to lighten up on some longs.
Wasn't our friend Einhorn last year just saying that this was a short? Didn't he say that, Brent? You remember? Or maybe it was a year and a half ago. It was up like $350. And Einhorn was coming out saying this is a short.
I can't.
Chipotle.
I think you did. I think you did back in 2012. I'm going back a little while, and it actually did cascade down from 350 to 250 back then. So that's when he was getting bearish. Maybe he got covered before it started really taking off, but long term he wasn't right with that call.
Okay.
He was very right with his Lehman Brothers call, but I don't know about the Chipotle. Maybe he got covered though.
Yeah, I don't remember that.
Nah, see the goldfish memory coming through here. I'm pretty sure if you guys go back there, see if anybody remembers that in the chat. I think he was dogging this one though, and obviously it's done very well. Looking at the option premiums, they look like they priced in about. I'm just looking at the January options here. The calls were $22. Oh no, this was the Febs, so actually it's a little bit trickier to price in, but looks like they were pricing around a 40-point move here, which actually we were getting a little bit better than that. So some of these things, some of these straddle buyers here maybe are making some money.
Is it true some of these analysts are still sticking with Amazon here after this down move? Jared is hopping in the chat room saying Pacific Crafts, Stiefel, CRT, Riley and Company, they're all keeping it at a buy.
Brent, this would be a question for you. What are the analysts doing on Amazon here this morning?
Let me see. Pulling up my trusty feed.
And Chevron just breaking two here,
Wow.
257 to 258 here. Revenues down 7.3% versus.
Is Chevron reporting?
Yeah, just
They
broke.
did. I didn't know they reported today.
Yeah, they're trading down too, and you had Exxon numbers bad too yesterday.
Walmart warning here too. Walmart warned this morning too. We haven't even got to that yet. Walmart warned they were looking for $1.50 to $1.60 next quarter versus analyst estimates of $1.65. So Walmart's trading down 75 cents here too. A lot of bad news everywhere here today besides Google, which was apparently bad news and is rallying. and obviously Chipotle. But a lot of bad news here
I
today.
see more than 20 research notes on Amazon today. Not exactly unexpected. There's a ton today, but not a single upgrade or downgrade. All kind of
Just,
maintaining their current ratings.
are they all moving their price targets around? That's what they usually do, is chase the price.
Yeah, let me see if I can click a couple of the street highs. I got a Deutsche Bank analyst raising from 400 to 475. I think that might be the street high there. Pacific Crest analyst cutting the price target there. That's also a 460, pretty high one there. Evercore at 480. Looks like they maintain their price target. Susquehanna 475, also a high price target there. They lowered their price target from 500 to 475. So it seems kind of mixed.
All these guys always come out right after the report and then adjust all their prices. Shouldn't they just leave their prices and let the thing and then see how they do at the end? Because when you always look at the analysts and then you look at where the price is, they're always within the ballpark because they're always adjusting their prices to where the current price is. It's kind of ridiculous.
Yeah,
Don't you think?
tail wagging the dog.
Yeah. I don't know. Some of these analysts, do pretty good and they make some pretty good calls, but sometimes they're just chasing price around and man, I don't like that. Anyways, let's move on to a couple other stocks that were moving there yesterday. So the aftermath in Facebook here. Joel, holy cow, this stock popped up huge yesterday. It wasn't really that volatile during the regular session, though. Kind of just hung out, got up to the $62 area, and pretty much hung out between 61 and 62 all day. It's selling off here this morning, though.
We had talked about the pre-market. Someone had an opinion at 63.95, and that kind of put the brakes on it. Opened up, had a nice open here. Opened up in the 62 handle, but struggled in that for like lot of the session, and then sold off. You just gotta think, it was a big move, sitting on some profits. People with the weekly calls and things like that lighten up. I just a little bit longer term here. I would not be surprised to see this thing. I don't know if it's when and if it's going to come down to fill the gap here, but I could see it coming down to that old resistance at the 59 over the last couple days. But hey, Dennis, I need to take off here, and I'm going to put Jake. Jake's going to finish up the rest and then go into our break here. So we're going to take a quick break, shift gears a little bit, and we're going to get our guest on the line.
Welcome back, traders. We've got Greg Gresh on here, the CEO of ZNAP North America here. Greg, how you doing this morning?
I'm fine, thank you, gentlemen.
So, Greg, we've got I hear you're a little bit jet lagged actually this morning here. Where are you at right now?
Well, actually, I'm in New York, but I just flew in back from Hong Kong. That's where our base, our mothership is, a base operation. All of our IT development's done in Hong Kong.
So, ZNAP, tell us a little bit about this company.
Well, ZNAP is a global mobile commerce platform. We seamlessly integrate loyalty, coupon offers, one-to-one communication with consumers, and many other things that really focus on making the payment a lot easier before, during, and after the payment.
So how exactly did you come up with the idea to like get into ZNAP? Like, was there like a kind of a catalyst that brought the problem that you really saw that you wanted to solve, or how did you kind of reach ZNAP as your solution?
Well, you hit the nail on the head. It is all about problems. It's kind of funny is that payments, especially here in the States, work pretty well. It's pretty easy for me to take out my credit card and tap it or swipe it. What we felt, our whole mission was to make the payment experience a lot better, again, before and after and during, which really requires solving problems. And so we took a look at all the vertical industries out there, and we started building specific features and functionality to solve those problems across those verticals and seamlessly integrate it with the payment.
Now, how can you use this? So how does this exactly work, this ZNAP?
Well, ZNAP is triggered with QR code technology, and our QR code technology is different than everybody else's. It can be static or dynamic. We do not put any sensitive information, payment information into the QR code. It basically defines the location of the point of sale or the marketing event, and then it also identifies specific features and functionality that would be unique to that biller or merchant. So we sort of avoid and eliminate all the various different security concerns that a consumer would have because we don't put any private information into the QR code, nor do we keep it stored on the phone. We keep it all locked very securely in a cloud-based vault that then we can securely on-ramp to the MasterCard and Visa, American Express rails for authorization, clearing, and settling relative to credit card and debit transactions.
Speaking actually of the various like credit card companies, did you hold a role at one time at MasterCard? Did you have that?
I certainly did. Spent 7 years at MasterCard before coming on board with ZNAP. I was in their consulting division, and then my last year, I got a little bored consulting to the banks and helping them make more money than they were already making, and I went to work for the Chief Innovation Officer, Gary Lyons, and his role was to develop an external innovation program for MasterCard. He sort of gave me the license to go hunt for early stage startups and great ideas for incubation or co-development, and that's when I ran across Alice Gadati, the founder of ZNAP. And we sat down and we talked. He had this great idea to build an e-wallet that actually wasn't focused on payments alone. And I said, you know what, this could be big. And I came on board. We worked out some additional strategic direction, and here we are a couple years later playing with all the big boys that started 2 years before us. So we've caught up, and now we're starting to surge ahead.
Now, having a background at in the payments industry like that, did that help you get things started, or at least just, I mean, I'm sure it gives you a good feeling for the competitive landscape at least, but do you think kind of gave you a head start, landing some of these contracts you might have needed?
It's kind of funny. It would be easy to say yes, but mobile is such a hot topic on everybody's top 5 list, as far as billers and merchants are concerned, that the door is always open. I thought I would have an advantage too because I could walk into a lot of banks and merchants just because of the Rolodex that I had. But you know what? Everybody opens the door, but it's a lot harder to close that door with a deal because people are sitting on the fence in this market. They're waiting to see what what happens? They got into the game perhaps a little early with a couple other larger players, and mobile adoption has been slow. Mostly because, again, a lot of the players are focusing on the payment alone, and it's not compelling enough. It's not compelling enough for the merchant. It's not compelling enough for the consumer for just a simple e-wallet. You need to be able to provide them a lot more to be compelling to use it. I don't know about you guys, but I put a whole hell of a lot more into my wallet than just credit cards and prepaid cards. I put, my clippings to get my free donut from Dunkin' Donuts. I put my health card in it. I put a lot of stuff in my wallet, and unless I'm able to use that app for a lot of different things, it's just not compelling enough for me to go through the process and use an e-wallet by itself.
So, okay, is there other people doing this? Like, who are your competitors in this space?
That's a hard question to answer, because there's a lot of competitors, or if you want to call them competitors, that do bits and pieces, but no one's been able to put it all together with loyalty and coupons. And the other thing that's kind of unique about us is we're creating a global brand acceptance mark. So we're already in 14 different countries, and it's challenging to put us in a box. We really can't be put in a box. We started off with e-commerce and then mobile commerce. Now we're going to this omni-channel capability that QR codes can transcend above all those different channels and actually facilitate transactions and marketing events across everything. And it opens up a whole new world for merchants as far as the way that they market and communicate with their consumers. And we can facilitate that with ZNAP, and we do not know of anybody else that can do that, at least as seamlessly as we can.
So would you consider, I don't know if you're familiar with the startups, either Protein or Coin, both of them are kind of like hardware solutions to bundle credit cards together. Would they be a competitor to you guys, or is that just like completely different spaces? I'm still trying to kind of wrap my head around the mobile payment space and the payments in general, the whole industry.
You hit upon another differentiator, is that we actually built the direction of the QR scan opposite than many of the players that you see today in the marketplace, like Level Up and the solution at Dunkin' Donuts. We don't require any hardware infrastructure to implement the solution. Basically, the merchant can be up and running with just a static QR code sticker at its simplest level, and we can complete transactions via the cloud in order to, and also marketing events and everything else via the cloud. So we don't require scanning hardware, and we don't let the consumer display a QR code to complete a payment transaction.
What are the specific advantages? So tell our listeners, why they should sign up with ZNAP.
Well, I think, again, ZNAP is something that brings the value to the consumer. Is you can have all of your coupons, all the promotions and loyalty benefits that a merchant could provide, all coming into one place, totally automated. So if you're not a loyalty member of a merchant, if the merchant is within the ZNAP network, that consumer can follow that merchant, can always have access to all the promotions and coupons that are being provided by that merchant. And if they want to start actually doing business with that merchant, then they can go ahead and do a simple tick and get access to all those special offers. So it pretty much always gives you access to whatever the best price, whatever the best marketing event, or any information that you could possibly imagine the merchant would be pushing to a consumer. You don't have to go looking for it. It will be always integrated into the ZNAP app, one place for you to go. The problem with a lot of the apps that are coming out, we just can't see people putting 1,000 apps on their phone. So what we're trying to do is build this global brand acceptance mark, which, again, a consumer can go to and interact and purchase and do business with a whole slew of different merchants and still have all the access to everything that they would normally get on a proprietary store-branded app. So, again, that's our vision, that's our mission. So far, so good.
Fair enough. So I guess we've had a lot of breaches recently, specifically was it Target, Neiman Marcus, and all that of users' data, right? Have you guys had any trouble with that? Are you guys? I mean, I'm sure that's something you guys are facing in the future of how to protect against that. How do you guys face challenges like that?
Well, the way that the solution is architected gives us a huge advantage. When you take a look at the Neiman and Target breaches, those breaches happened on the at the POS, where the consumer exchanges their private credentials and credit card information to the merchant via the point of sale hardware. And obviously that malware was able to scrape the RAM in that point of sale hardware to get access to the information. ZNAP never allows any of the personal identification information or the credit card information to be transferred to that point of sale hardware device or the merchant itself. It always stays in the cloud, and we match the transaction tender to the information of the consumer and their credit card credentials in the cloud, then safely on-ramp it to the financial institution for authorization, clearing, and settling. There are no criminal access points, especially on the physical side, where they can get to the data. Our phone technology is quite unique. It's a multi-factor authentication of your identity. So when you make a transaction, we're 100% sure that it's you making that transaction because of the multi-factor capability technology that we built into the phone. So there's unless they're able to unlock our vault of information, which is extraordinarily difficult, if not impossible, because I would say that we have equal security, if not better security, than you would find at the MasterCard, Visa, rail level. You don't hear about the breaches at that level. That's very, very secure. When I worked at MasterCard, I think we got over 10,000 attempts per month to hack into the database to get access to card information, and nobody's been successful yet. And that's because you can encapsulate this data in those cloud-based environments very, very securely. The breaches usually happen at the point of interchange. I mean, even when you give your credit card to someone to take away and swipe and give back to you,
Right.
you're giving them information that they can piece together after they send someone to go through your garbage. So I do see swipe technology going away. Now, will this latest breach cause a major reaction by Congress to come in and start putting in more regulation and more legislation? I'm not sure, but I think I just saw an article from the National Retailer Federation, the NRF, and they said, oh, this is going to be the catalyst to move to EMV, which you guys know is what they use in Europe for chip and pin. And I got to tell you, EMV wouldn't have thwarted this breach. I mean, it's hardware too. There's no telling that if that would have worked.
Right.
And so, again, hardware I do not think is the answer to completing transactions. I think we have the right recipe, and so I'm not a big EMV supporter. It's going to cost the industry billions and billions of dollars, and even though it may be worth it to reduce the amount of security breaches, it's not going to solve the problem. The only way to solve the problem is to take the credit card information and the personal information out of that environment, and you can do that through cloud-based transactions.
How do you go about signing up for this? So I'm on your site right now, ZNAP.com, like you snap your fingers. How do you go about signing up for this?
Well, from a consumer perspective, all you got to do is go to the any of the app stores and download the app. From a merchant's perspective, you do what you just did. You go to ZNAP.com, and right on that main landing page, there's a little, not an icon, but sort of a banner ad that you click, and it'll give you the list of all the various phone numbers and emails for sales support in all the different countries. Every country is a little bit different from a regulatory perspective, so we have to have data centers set up, we have to have compliance and risk, all those pieces in place so we can properly navigate all the regulatory environment and also make sure that the app adheres to that regulatory environment. So we have separate offices and people covering all those different countries because each country is a little bit different.
Very cool. I guess one thing I have to ask you about, we're always talking about Bitcoin over here as far as a new way to pay for things. I guess it kind of is in the payment space. So what do you have any thoughts on it? Like, do you think it's going to become a more accepted currency in the future? Do you think it's just kind of a fad that maybe even other things like Dogecoin or other things, other electronic currencies are going to replace it? What are your thoughts on Bitcoin in general?
Bitcoin. I mean, the idea of a currency not being able to be manipulated by governments is extraordinary. I love the idea, but I think we all know that there's a lot of things that can be done with a digital currency that puts the government's or the country's own currency at risk, or the people at risk. So we do not have any plans to move forward with a digital currency like Bitcoin in our wallet. We're a highly regulated, industry, being in the wallet space and mobile commerce space. So no plan to do it. I would love to see Bitcoin take off. However, my personal feeling is that once it starts getting any traction, it's going to be so highly regulated that it'll strangle it and it'll die on the vine.
Well, we've had Greg Gresh on here, CEO of ZNAPNorthAmerica.com, and Greg, just want to thank you for for being on the show here today and telling us about your product.
You're most welcome.
All right, guys, we'll take a quick break here, and then we will come back to you with Mighty Joe Young and the morning headlines.
Unless Mighty Joe Young is ready to go now. Mighty Joe Young, are you
Oh,
there?
I am ready
He's
to
on the
go
line.
right now.
He's ready to rock. We don't need to
fantastic.
take a
That
break.
sounds
That's
pretty
Joe
cool.
Young. He's fast.
I am. Like with a snap of your fingers.
Oh, I see what you did
Oh,
there.
there you go.
Well, I just want to thank Greg Gresh for coming on the show today. That was pretty cool, and we would like to potentially have him back on again. Jake, what do you think of Greg?
I can dig it. Yeah,
You can dig
definitely.
it.
The whole payment space, especially with Mastercard earnings coming out this morning, I thought that was kind of interesting to.
Right, yeah.
Yeah.
I also find it interesting. Can you imagine a day when there's no more swipe payment technology? When it's just like the mobile speed pass.
Yeah, I remember the days of that thing. What happened to the mobile speed pass? Is that still a thing?
I mean, like it went the way of the Betamax and the bread maker, because essentially you could just steal anyone's speed pass and
Right.
get gas. I used to try and steal my friends all the time. But it's true, I'm cheap. I'm not going to lie about it. But moving into today's editorial headlines from around the globe, President Barack Obama is asking major corporations for their help in putting the long-term unemployed back to work. CEOs from companies like Apple, Walmart, Visa, and Boeing are heading to the White House on Friday today to deliver commitments to do their part. More than 300 companies have signed so far, the White House has said. Although the unemployment rate has declined to 6.7%, long-term joblessness in the U.S. remains a major problem. The concern is that the longer someone is out of a job, the harder it gets to find a new one. Companies are less likely to hire people who haven't used their skills in months or wonder why another employer hasn't already snatched them up. With that concern in mind, the Obama administration has been working for months to exact commitments from companies to ensure their hiring practices don't discriminate against long-term job seekers. That includes doing away with candidate screening methods that disqualify applicants based on their current employment status. It also means ensuring that job ads don't discourage unemployed workers from applying. An Italian appeals court convicted former exchange student Amanda Knox and her ex-boyfriend Raphael Solicito on murder charges Thursday night. Prosecutors said the couple had killed Meredith Kircher in November 2007. They were convicted 2 years later of murder, but those charges were overturned on appeal in 2011. A judge said Thursday that Knox, also convicted of slander, was sentenced in absentia to 28.5 years in prison. Solicito's sentence was 25 years. Knox, who was at home in Seattle, Washington, said her conviction would bring no consolation to the Kircher family. She called the legal proceedings a travesty. Italian authorities stopped Raphael Solicito near the border with Austria and Slovenia, Italian police told CNN on Friday. Yahoo says it has identified an attempt hack an attempted hack on customers' email accounts. Said the usernames and passwords for accounts were likely to have been collected from a database owned by a third party that had been compromised. It has reset passwords on all affected accounts and has implemented an extra verification step when users sign in. The company said it was working with law enforcement to find out who was responsible for the attack. It has not revealed how many Yahoo email accounts have been affected. Our ongoing investigation shows that malicious software, computer software, used the list of usernames and passwords to access Yahoo email accounts, said a statement on Yahoo's Tumblr page written by Jay Rossiter, a senior vice president at the company. The information sought in the attack seems to be names and email addresses from affected accounts' most recent sent emails, the statement said. Amazon is planning to offer a checkout system to retail stores later this year, but the point of sale and payment system is only one part of a more ambitious plan by Amazon to sell a comprehensive suite of digital products and tools to small and mid-sized businesses. Two people familiar with the plans told Recode. The payment system, which may incorporate the use of a Kindle as a point-of-sale device as well as a credit card reading dongle a la Squares, is expected to be the core system, one of these people said. But Amazon is seriously considering offering a more comprehensive software suite targeted to small and mid-sized brick-and-mortar businesses that may include products such as accounting software, website creation tools, and inventory management systems, though the list of tools appears to still be in flux. The platform is also expected to contain current Amazon offerings, such as Amazon Local Daily Deals, whose group has been hiring aggressively in recent months, these people said. Men's Wearhouse may be willing to increase its bid for Joseph A. Bank in the continuing takeover battle between the two men's suit retailers. In a letter to Joseph A. Bank's board released on Thursday, Men's Wearhouse reiterated its previous offer to buy its rival at $57.50 a share, but added that we are prepared to increase our offer price if you can demonstrate or we can discover additional value through discussions or limited due diligence. Joseph A. Bank had rejected the offer of $57.50 earlier this month, calling the price inadequate and opportunistic. Shares of Joseph A. Bank closed at $54.86 on Wednesday. Wednesday or yesterday?
I think that's yesterday. I don't know. Maybe.
Closed at $54.86 on Thursday, not Wednesday. Sorry about that. 18 operators of high-end escort service allegedly banking on Super Bowl week to deliver party packs of cocaine and prostitutes have been charged with drug and sex trafficking, New York authorities said on Thursday. Sorry, Jake. I know you were really planning on that.
Damn it.
The nearly year-long undercover investigation discovered that in addition to selling the party packs, the ring allegedly laundered the illegal proceeds through front businesses that included a clothing wholesaler, a wig wholesaler, a limousine service, and a beauty supply wholesaler, New York Attorney General Eric Schneiderman said in a statement. The ring targeted wealthy customers in New York for large events, authorities said. Last week, a text message was blasted to frequent customers noting that new, sexy, and beautiful girls are in town waiting for you. The enterprise also ran numerous advertisements on the internet and on public access television. Last year alone, the
They
ring...
advertised on public access television? Are you kidding me?
Wouldn't you?
Like, come on, you're gonna get. Of course, you're gonna get caught.
Well,
Come on.
here's why. Here's why, Jake. Last year alone, the ring made $3 million in credit card sales. People are paying with their credit
In
card.
credit cards.
So it's advertised as a legitimate business for companionship and illegal Schedule 1 drugs, narcotics.
Okay.
You know what? Now that I think about it, that really doesn't make any sense, does it?
No. You're paying with a credit card for illegal services? Really? Come on.
Jake is really bummed because all his credit cards are maxed out. So
You know, it really is. It's tough.
So how would you go to the bank and say, "Yeah, I just need you to float me a short-term loan for the Super Bowl"?
For a party pack.
Yeah. Speaking of the Super Bowl, on Super Bowl Sunday, Twitter will again serve as a grand stage for advertisers to promote brands to millions of people captivated by gameplay, halftime shows, and slick commercials. But Sunday's game also will be a litmus test for whether Twitter can persuade marketers to spend more money to have a presence on the service instead of simply sending out free tweets, hoping their hashtag-stamped witticisms go viral. In preparation, Twitter has been offering consulting services grounded in analytics, which it says can lead to smarter tweeting. On game day, Twitter will feed data to brands like Unilever's Axe deodorant to gauge reaction to ads and to predict the next internet meme before it happens. It will also suggest targeted keywords for ads based on conversation topics, such as blasting tweets to Bruno Mars's fans when he sings at halftime. Known notable ad appearances. Bud Light's ads will combine to 3.5 minutes, the longest ad time for any company. The Muppets will be on display with someone's car. Ellen DeGeneres is teaming up with the new Beats music app, and the men of Full House are reuniting with Oikos Greek yogurt. The latter are big users on Twitter and Instagram, which could be significant in driving a brand's social conversations further. Funny, we were just talking about some of the men from Full House earlier today. John Stamos,
You're right, we were.
touring drummer for the Beach Boys. And today's trivia tidbit. The Red Hot Chili Peppers have been given the honor of taking the stage with Bruno Mars. Is that really an honor? No? True, that's true. Okay, so the Red Hot Chili Peppers have been given the honor of taking... I think Bruno Mars should have the honor of being on stage with Red Hot Chili Peppers during Super Bowl's halftime show, and the band's bassist Flea, who also starred in Back to the Future Part 2.
Nice.
Actually, he might have been in all of them, but I know he was in Part 2. Bassist Flea had an interesting performance idea that he sent out to his legions of Twitter followers. How am I supposed to... Anybody want to see my male chicken at the Super Bowl? Obviously, it doesn't say male chicken. It's C-K. I don't think he means cook, like his in-house cook. No.
Yeah, I don't think so. I mean,
So Flea tweeted if anyone wants to see his man parts at the Super Bowl. Flea's tweet was deleted at the speed of light, probably because the NFL has a zero-tolerance policy when it comes to bad halftime show behavior. Here it is. Janet Jackson's famous 2004 nip slip is definitely their most famous gaffe, but they're also suing singer MIA for flipping the bird during the 2012 show with Madonna. After performing in nothing but a tube sock for decades, who knows what he has planned. For about the first 25 years, the halftime show was mainly composed of college bands or the Up With People group. It wasn't until the early 90s that the Super Bowl and its networks made a conscious effort to use the halftime show as the spectacle it has become. Today's trivia question, ladies and gentlemen: what artist made executives think this way? Think this way as in like bringing an artist. What artist changed the Super Bowl halftime executive planners' minds about having big names perform at the Super Bowl? Does anyone
could have been
know?
like Madonna or someone like that.
It could have been Madonna.
I guess I'll drop my guess in there. Anybody else got one?
This longtime, very famous person. Jake, I'll give you a few yes or no questions if you want.
All right. I guess you know what? I'm gonna stick with my guess. That's what I dropped. I don't want to change it up. You know, just
Michigan's own Mad Donna.
yeah. I'm just gonna roll the dice.
Okay. Does anyone in the chat have a guess? Shubs, you're supposed to be posting the trivia question in the chat so they can answer it. Come on, man. Brent, do you have any guesses? No? Erica, Laura, Darius? No? Well,
We'll have to get Joel on the phone. I'm sure he's got this one.
Joel, I don't think Joel would. Well, I mean, Joel was like a conscious adult when this took place. But I'm not sure if he would know this one or not. I wonder if he's listening to the show on his way to see his probation officer right now. Any day now, Shubs. What famous artist made executives turn the Super Bowl halftime into a big spectacle? Spectacular. Boo-doo, boo-doo. Well, they're not going to hear it for 30 seconds, so I can go ahead and say that Jake's guess, Madonna, was incorrect. It was Michael Jackson.
Oh, you know what?
Michael Jackson, following the previous two shows of New Kids on the Block and Gloria Estefan. The show is considered one of the most watched events ever in American television. During the January 31st show, Jackson played 3 songs. What? January 31st, 1993. Jackson played 3 songs from his 1991 album Dangerous, as well as the classic 1982 single Billie Jean. Sales of Dangerous shot up dramatically in the week of the show. In the week ending January 31st, it moved 21,000, up 83% for its best week of sales outside of the Christmas season since July the previous year. In turn, the album vaulted from number 88 to number 41 on the Billboard 200 chart, the set's highest rank since June of the previous year. The next week, Dangerous climbed to number 26 with 29,000, up 40%, and then sold in excess of 50,000 for the next 6 straight weeks. Michael Jackson, trendsetter, pop culture icon, king of pop.
Mm-hmm.
He's the one who made him change their minds. Interesting. Well, that wraps it up for today's editorial headlines and trivia tidbit. Just a reminder, ladies and gentlemen, that the show would not be possible without our dear friends at OptionsHouse, who will give you 150, give you and you and you and you and you each 150 commission-free trades just for signing up for an account through this page. There's links at the top, at the bottom right. Click on through, open an Options House account if you haven't already. Get 150 commission-free trades just because you listened to Benzinga's pre-market prep.
My buddy did that, and he's trying to break through all the trades. He didn't realize how many free trades he's getting, because he just not like a super active trader, like a couple moves a week, and he's just like, I'm not even making a dent in this this yet. This is pretty nice.
Right,
so.
these are trades that could last years.
Yeah.
If you're sort of a conservative trader,
Yeah.
or it could last one day if you're like Dennis, who manages a portfolio of 82 stocks was the last I heard. I'm sure he'll
It's only on the weekly
Dennis?
option expirations.
Wow.
It'd be
Out of
pretty good
nowhere.
Monday, Tuesday, Wednesday. When we got to Friday, I'd probably pop in and exhaust the 150 in a hurry. So.
Yep. Well, there you go. So that does it for me. Who is taking this one away from me? Brent, are you
Brent.
out there
I got a
somewhere?
couple of things I wanted to talk about, but
Awesome.
you didn't say make a click, Joe. You said click on through, and that just made me think of click on through to the other side.
I'll be sure to sing it that way next time.
Sweet.
That was
Okay.
pretty good, Brent. I'm
Yeah.
Thank
pretty
you.
impressed,
I can
actually.
dig it.
You should try out for American Idol. You should have went out when the
Wow.
American Idol was in Detroit in the summer.
I
know
just
what,
I just
though?
watched some of that. They just aired it recently, right? It was pretty rough.
I would rather, I think, go for America's Got Talent because I would want to get in front of Howard Stern. I'm a big Howard Stern fan.
Brent's talent would be having a curly mustache.
That's it.
Be
I
an amazing
Not even
talent.
like
Just
a
look at
song
it.
and dance routine, or maybe he could dress up
He
like
just goes like,
Bootsy
"Here I am."
Collins after, because we all partook in Bootsy Collins' like funk bass line lesson this morning. You can learn how to play the bass, Brent, and get those sparkly sunglasses that he's got, and go on America's Got Talent.
Well, I do like your guys' support. That's encouraging. So thanks, team.
It's a sad day for Brent because he had big plans this weekend that he's worried might be canceled due to the passing of someone he's very dear to his heart.
It was not anyone that I'm close to, but it was a member of a band that I like. Potentially might not be playing this weekend because they had the guy that started the band. He passed away yesterday. What can you do, I guess?
What was his name, Brent?
Miro is his name. He was the original drummer from a band called Humphreys McGee.
Oh, Humphreys. Wow.
Yeah,
I
so
know.
he's not been in the band for a number of years. Like 2002, he got out of the band, but nonetheless, still a tough break, I'm sure, for the guys in the band. So
Still a hit. We'll just have a brief moment of silence.
that was it. That was it. That was
Very
good.
nice.
So what a earnings week it was, huh?
No kidding.
Oh, it was
Wow.
it was a big week. But what about the upgrades, downgrades, Brent? You got a few to highlight there because we touched on them a
Sure.
little bit earlier, but maybe you could jump into a few more of the details.
Yeah, sure. So I don't have my list created today. The list that I created today was some earnings to preview for next week, but I can jump into a couple of these upgrades, downgrades. I'm looking at the Benzinga Pro calendar right now. Looks like a ton of downgrades this morning. Looks like a ton more than upgrades for whatever reason. Let me scroll through here. Grab you a couple of the good ones. Let's see. ADT got downgraded at Stifel Nicholas this morning. Adtran downgraded at Goldman Sachs this morning. Diageo
Diageo?
downgraded from buy to neutral at Goldman Sachs. Deutsche Bank, we talked about this one a little bit earlier. Deutsche Bank did get downgraded by Barclays, and it seems that Barclays downgraded might be pulling down some of the other names. I'm sure
I love it when one bank downgrades another bank.
it's kind of funny, right?
Mm-hmm.
Yamana Gold, AUY, downgraded at Raymond James. They have a market perform rating on that stock now. Let's see what else we got here. Tibco Software, TIBX, downgraded at Barclays. They now rate the stock with an underweight rating. Let me give you a couple of the upgrades. I got to click over to my next on the calendar. We have JP Morgan making a call on some of the airline stocks today. They upgraded shares of Alaska Air from neutral to overweight, boosted that price target up to $97. JetBlue upgraded from underweight to neutral, so not quite as convicted an upgrade as that Alaska, but nonetheless an upgrade. And the last one, I believe it was UAL, thank you, sir. Upgraded also from underweight to neutral. They see that stock around 53.50 in about a year. Baird upgrading shares of Generac this morning. They see that stock outperforming. Who else we got? You might like this one, Dennis. ITT Educational upgraded at Morgan Stanley this morning from underweight to equal weight. Ericsson getting an upgrade at UBS this morning. And Janney Capital upgrading shares of Zynga following that news yesterday. What were we going to say, Dennis?
What happened with that ESI yesterday? Just looking at the chart of that one. Holy cow. We didn't cover that on the show, but they reported. Obviously didn't report very good. They lost 40. Did they lose 49 cents? We're supposed to make money. Was that like a shocking loss or something yesterday? The stock went yesterday from $37 down to $29. That's just an incredible move there.
And you know
the
what,
stock
Dennis?
5 days ago. Look at that ESI chart.
That's what I was gonna say. It was almost at $45. It was at $45 on the 21st, last Tuesday.
I'm seeing a loss of 49 cents with the expected gain of 54. That seems like there may be
got to be some
there may be an adjustment
charges
there, but I mean, nonetheless, the stock's getting smacked down. There wasn't any guidance, so I mean, with how much the stock is falling, it's maybe that number is correct with just a massive one-time charge or something like that the traders are really just unhappy about.
The stock fell yesterday. This was actually reported yesterday. This actually was reported yesterday morning, and the stock fell 7 points yesterday on this news. It did bottom yesterday at 28.57. Obviously, keep that in mind here. Who's upgrading them this morning?
It was Morgan Stanley, and Morgan Stanley analysts, I mean, sort of sticking his or her neck out, but at the same time, that analyst did have an underweight rating, so it seems to be kind of more of just like a good call, I guess, on the name
or equal weight, I guess,
and just moving to the sidelines on it. Yeah, exactly.
Right.
So, I mean, you kind of look at those upgrades and they seem kind of funny. Like, okay, you're upgrading the stock after it's down. How much? 40.
Well, that's what you're supposed to do, isn't it?
But that's what you're supposed to do. Exactly.
Usually the other ones are they're upgrading it after it rallies. So you give the guy props there. He's buying low and he's selling high, buying low. It's what he's supposed to be doing.
He's not playing like Hindsight Capital Corporation, so that's good.
But it just seems so many analysts do it, kind of the opposite way, that you get a call like this and you're like, what? He's upgrading it. But actually, you're right, Dennis. This is really how it should be done.
Looking at the charts there back from September, 28.5, 28.70 area was absolutely huge. We bottomed there yesterday, so we kind of where we found support. We had cut through that area in October, got down as low as 27.97, but it gets thick in this 28 handle, and that's what happened yesterday. We got all the way down there. Basically, I always use the analogy, when you have a hard floor and something's fallen that far, like 20%, sometimes you throw a basketball out of floor, it'll bounce a little bit, obviously. Maybe basketball's not the best analogy because it'll bounce a lot. But you throw something at the floor, it might bounce a little bit. That's what we saw there yesterday. Obviously needs to hold. The whole 28 area is absolutely enormous for this. I think it does hold. Obviously with the Morgan Stanley upgrade today, maybe this can buck the trend and actually close higher, because we are trading up 6 cents right now, despite the market being down 15 points.
That would be the dead cat bounce, right?
There you go.
You heard of that, right?
Yeah, the cat falls down and he bounced a little bit.
A little bit, not very much.
The visual.
Yeah, don't use the visual on that. So let's update. Let's just go into the overall market here. We are down 15 points now. We got as low as 1761 a quarter. Joel, when he was on the show, was citing 1764, and then he was looking down the 1760 area. Obviously, we've had a 20-point range, or actually 23-point range here overnight. High has been 1784.75, low 1761 a quarter. So still down significantly here. We do have some imbalances that are just breaking here. Well, actually, the imbalances come out at 8:30, but they're starting to get updated here pretty good. So it can start to give us a pretty good feel here. We are seeing the financials probably going to be the market leader future on the downside here today. The Citigroup trading down 85 cents here. We've got Bank of America still trading down 20 cents. JP Morgan trading down 70 cents. So we are off the lows on some of these stocks. They have bounced back with the S&P futures a bit, but it does look like the financials are going to be relatively weak here this morning.
Definitely want to keep an eye on those financials to be sure. Just taking a look at Bank of America real quick, see how they're doing. They're not really dropping as much as expected. And take a look at Goldman real quick, see if they're doing anything. Not a whole lot today.
Down a couple bucks
yeah.
on Goldman here too. We bottomed out there a couple days ago. If we go back 3-4 days ago, 163.43. We're trying to take that low out, and this is what you got to keep in mind when the stocks start making new lows on the move. It's been a rough year for the financials, where they were the leader basically for the last 3 months in October, November, December, the last quarter of 2013. Financials were the leader. They've been the laggard so far this year, and they've been leading the charge down. And it looks like it's not going to be an exception there today. So Goldman is trying to take out the lows of the move. Let's just look. Morgan Stanley bottomed yesterday. It actually popped a lot though, but it bottomed yesterday at 29.28. Actually 2 days ago, 29.28, and then yesterday it held up nicely. But we are getting back down to that area again. So this whole 29.30 area on Morgan Stanley will probably give some support here again. JP Morgan here is down 70 cents here. So it's quite a ways off the lows that they made. JP Morgan made a low 4 days ago back at 54.69. So we're still 70 cents above that area. But those are the numbers that this needs to hold. But these financials will be coming into some support here this morning. Some of them opening into support.
You know what, Dennis, I was kind of running around this morning, didn't have my headset on the whole time. Did you get to talk about the Walmart guidance at all?
No, didn't really break. We just mentioned it, so maybe you can break into those details. And I'm going to have to leave this up to you guys here, too, because I've got we're 10 minutes before the open. I've got a few positions on here, so I got to go work those out. So I'm actually going to pop off the show here. But, yeah, so I'll let you guys talk about the Walmart guidance. It's popped off those lows pretty good.
Mm-hmm. Yeah, Walmart did guide the fourth quarter EPS between $1.50 and $1.60. Street was looking for $1.65, so a little bit of weak guidance there. I'm gonna pull up the Walmart.
They actually said it was going to be at or below that range. So even more concerning. You know, you look at the 150, 160, you go, okay, that's below the street estimate. But they said it was actually going to be below potentially even the 150. So definitely a concern this morning, and I'm sure there's going to be some other retailers moving on that news. I always look at the XRT, that is a retail ETF. Not quite seeing any action in it, but you don't normally get a lot of action in this ETF before the open.
Pull that up real quick, the XRT. Brent, you did have a preview of some of the earnings for next week. Maybe we want to knock those out before the market opens here, and we'll then dive more into the action from specific stocks.
All right,
at the open.
Sounds good. Let me pull my little notes up here. Okay, so a quick preview for next week's earnings. I would say that yesterday was pretty much like the earnings day. Would you agree, Jake?
Yeah, at least this week.
What was you remember the number on
There's 190 reports.
190 earnings reports yesterday, and remember these are some more notable earnings reports. In a week or two, we're gonna probably have more than that figure of numbers of earnings being reported. However, it's a lot of the more lesser known names. So this was pretty much the heart of the earnings season, but we do still have a number of pretty good earnings reports next week. So let me just kind of roll through these pretty quickly. Just going to sort of list them off for everyone. On Monday of next week, we're going to get Anadarko, we're going to get Hologic, and Yum, which traders like to use as sort of a proxy on some of the Chinese consumer market. Traders watch that one pretty closely. On Tuesday of next week, we're going to get earnings out of, let's see, Arch Coal, Archer Daniel Midland, Boston Scientific, BP, Michael Kors, Sirius XM, Toyota, Buffalo Wild Wings, which is a good timing considering the follow-up for the Super Bowl, and also going to get Gilead on Tuesday of next week. On Wednesday, we're going to get earnings out of Merck, Time Warner, Conway, Pandora, Select Comfort, that is a mattress company. We're going to get earnings out of Green Mountain, out of Twitter, out of Disney, and did I mention Humana? So Twitter on Wednesday, that's going to be a big earnings day, especially with Green Mountain on the same day. And I believe, let me think here a sec, I believe that Green Mountain does come out after the close, as does Twitter. So around 4 o'clock on Wednesday and next week, heads up, A lot of good earnings reports coming out on Thursday of next week. AOL, Cummins, Diamond Offshore, GM, Kellogg, New Skin. That's more of a momentum play, but I'm going to mention it nonetheless. Penn National Gaming, Philip Morris International, Activision Blizzard, Expedia, LinkedIn, Tempur-Pedic, another one of those mattress firms, and Sony. On Thursday of next week. On Friday, not as many earnings, only a few notables. Let me see if I can pull those up really quick. Didn't have those written down. Jake, any of these earnings notes or earnings preview kind of pique your interest at all?
Well, I mean, obviously next week starts the the monstrous 3 weeks of earnings where we eventually peak not next week but the week after at 360 reports on that Thursday. So there's gonna be a huge amount of activity next week and the week after and the final week following that, and then earnings season drops off pretty sharply after that. But as far as market cap, I think after this week we're done with 25% of the market cap in the S&P. I believe.
Maybe more.
Might be more.
Maybe
than that.
more. Even.
There's a lot of big names that have reported now, and you can kind of get a feeling. But now we're going to get all the little smaller names, trickling in. We'll see how that works out. But I'm really excited to see Twitter, honestly, and not necessarily for the earnings. I think the earnings are going to definitely disappoint. I just don't think that I think the street's going to be surprised when they don't see that thing raking in cash. But I think the conference call is going to be really interesting.
Yeah,
really. I just want to see how they operate it. How much vision they're really showing in that conference call, because that's really where the value in Twitter is what the vision is, where it could really be. And I hope it's not just a standard conference call where they're saying, oh, here's like 50 different metrics. That's not. The metrics are important, but I'm more interested in seeing, all right, where are they taking this business? What's the game plan?
Yeah, that's something that you've kind of been harping on for some time, and you kind of turned me on to it, and I've been sort of liking that kind of thesis a little more than the fundamental. I mean, there's no real kind of fundamental analysis to the
if you're
thing.
doing a deep fundamental analysis in this company, you're not going to be buying it.
Right.
I mean, you're definitely buying it on hopes that it's going to do some pretty cool stuff in the future. And I've always been focused on the data on this. Obviously, because the whole concept of big data out there is hugely valuable. Joe was talking about how they're going to be doing consulting to teach companies how to tweet more effectively and how to predict like internet memes. I mean, if you can predict that stuff, it's very easy to ride that and use that as branding. So I don't know, that data seems really, really valuable, and I'm surprised that's not their chief revenue model.
So Twitter on Wednesday again, or was it Thursday?
I think you said Wednesday.
Wednesday. Let me double check that.
Wednesday is the
Wednesday
correct day there.
is the proposed day for Twitter. So do you have a list of some movers?
I certainly do. I mean,
Okay.
I think first off, we definitely want to hop into just the earnings this morning, and actually, we'll start with earnings after the close yesterday, not just this morning, because after the close, we got a ton of reports. So I'm gonna get started there.
You give me the stats. I'll see what kind of technicals I can jump into. I'm not quite the technician as
Sure
Joel,
thing.
but I can definitely make a stab. So
Well, one thing we can do is we can spend a little bit less time on names. We can get through more in general. We can kind of go for that. But I mean, the first one we got to start with is Google. EPS came in at 12.01 versus expected 12.24. Revenues came in at 13.6 billion versus expected 16.72. So Google, if you don't have that ticker on the top of your head, it's Golf Oscar Golf for anyone listening, following along on their own charts. Obviously, a slew of analyst reports coming out today. I guess actually I only see one in the chart right now to see a bunch of outperforms in a row, but that one from FBN Securities maintaining that outperform rating. Not seeing a ton of data coming out on them. I guess it was really just that conference call impressing traders and investors. It amazes me that it managed to, it dipped a bunch, but it seems to have recovered most of that. Joe, or Brent, you got any thoughts on this? I mean, obviously, we were talking earlier about why Google was recovering, and Joel thought it was a major short covering. You had that big dip, and then as it started rallying, all the shorts panicked and just got out, and then that was just more, it was just momentum there. But I don't know. What do you think here?
I mean, the short float on Google was pretty slim. It was about 1%. So I'm not throwing the squeeze scenario out the window. I'm just looking at this level around 1140 right here. There was after we got that knee-jerk lower. We kind of bounced off the 1100 level, and we bounced pretty much right back to 1140, and then had about, let's see, an hour or so of consolidation ahead of the call, and then pretty much right as the call was starting, stock spiked up to 1180, and that 1180 level sort of served as a area of resistance and support, kind of going back and forth for pretty much the post-market session. And this morning we kind of just dipping below that level, that 1180 level, as of only about, I don't know, 10 minutes ago or so. We sort of selling off about $5. Looks like the stock's going to open about 1175 here.
So definitely going to get some action there. We got to keep Google on the radar. That's a huge name. Obviously, with selling off those Motorola assets as well, there's a lot of action going on with Google there as we near the market open. So going to be a lot of action there. Got to keep an eye on it. I'm still surprised it's rallied up so much, but it is Google. I saw James Altucher put out a piece saying why Google may go to zero. I don't know. I haven't had a chance to really dive into it, but masterful headlining writing right after a big earnings report like this in a rally. It looks like we've got Google trading down a little bit here at the open. I'm seeing 11.
Ooh,
it's
it
in
is selling off
1160,
here.
So really coming down. A lot of traders trying to get out of the name. It looks like.
So that's going to be. I see a a post-market high at 1193.45 last night.
looks
So
right, yeah.
we're down about almost $30 from that
you
high.
even had a low in the pre-market yesterday of below 1100 even. So
Yep,
you went
it
from
did touch
below
below that.
1100 to 11
Almost 1200.
So yeah, so basically you had over 100 bucks of movement there. It's just crazy. So and then lots of action this morning. The pre-market looks like it's hanging on to that 1160 level. So we'll keep an eye on that. Do have some other names we want to move through, specifically Amazon. I want to hop into that. Alpha, Mike, Zulu, November reported earnings after the close yesterday, and that was another major one that we were waiting for. EPS came in at 51 cents versus expected 66 cents, so a miss there, while revenues came in at 25.59 billion versus expected 26.07 billion. So Amazon disappointing a little bit there, which is really interesting because this quarter should have been reflecting the holidays, and we had some great numbers as far as traffic for Amazon, number of sales. So kind of surprised me personally. Brent, what do you think here? We've got Stifel Nicholas maintaining their buy and raising their price target. So they're kind of defending it. Just kind of going through some of the headlines here. Benchmark maintaining their buy and raising the price target. So a lot of these guys, they're just getting more bullish on it while it's trading around 370 right now. It was over $400 at the close, and then just lost that, and it's recovered a little bit, but sitting at the low 370s right now.
We are selling off right here, as looks like the market is kind of moving lower. We're kind of ticking higher now, actually, at the open. 370 bucks right now. If we take out, let me pull back my chart a little bit. I don't see a ton of support until around the 360 level. So if we're going to give up this 370 level, it is approaching 371 right now. If we're going to give up the 370 level, there is quite a lot of air until down to 360. But I mean, with Amazon at all-time highs, there's just not a ton of precedent here that we have to go off of.
Yeah, there like you said, there was a lot of action around 360. At that point, I'm kind of interested in seeing where it goes. So
I mean, that was back in October. It's been quite some time.
diving more deeply into the report, I thought it was interesting on their conference call. They're considering raising the price of Amazon Prime by 20%. They also noted that the number of products on Amazon Prime had grown from 1 million products to 19 million. So they also noted that AWS, which is their server systems, is growing very fast. Whatever that means, I wish they would have given a metric for that, but growing very fast. It sounds good. And then there's also, they gave some updates on Amazon Fresh about where that may be going. But overall, companies just just didn't match expectations. So got to keep an eye on it.
And Fresh is like there's like a grocery store.
Yeah,
kind of concept.
It's a food delivery service from Amazon.
And they're only doing this in like a couple markets, right?
Yeah, it's Atlanta and I think it's Seattle. Is that where they? I can't remember. It's
Frisco, I think.
Really?
Maybe.
Okay, it's
Maybe Seattle.
It's two cities, and I know Atlanta's one of them. And they set up these warehouses. They're testing it out there, so it should be interesting to see. Speaking of fresh food, though, one company that prides itself on fresh food is Chipotle. Charlie Mike Golf.
Good segue.
Thank you. Reported earnings after the close yesterday came right in line with the EPS figure 253, matching analyst estimates. While revenues came in at 844.1 million, which beat expectations of 826.3 million. So Chipotle with a beat on the top and a match on the bottom. Charlie Mike Golf is the ticker there. Oops, looks like I hit Charlie Mike Alpha on my chart. So Charlie Mike Golf, and I need to set up my charts. And we've got a nice rally today. It was below $500 at the close yesterday, and now we're at almost $550. Serious action in Chipotle here. Looks like traders are just eating this up.
Ho ho ho.
Sorry, I couldn't resist.
You had
that was rough.
Jake is the CPO in the Benzinga HQ, Chief Pawn Officer. So that's where that one came from.
Wearing it with pride.
We are below 550 here. Last night after the report, 550 appears that it served as a bit of resistance on the upside. Did break through to a post-market high of 565, but since has come back down, and it looked like the bulls wanted to keep that one above 550. Does not appear that they're going to be able to do it this morning. We touch below that. We're kind of bouncing a little bit here, though. 549 last trade in shares of CMG.
Yeah, this company did say they're looking to buy back shares opportunistically. That was the term that they used. It could be interesting. They're also going to be experimenting with mobile payments, which I think that's also interesting. Wunderlich did maintain their hold on the company while raising that price target to $542. So they've already crossed over the price target. That should be interesting.
You know, Jake, right as you started talking, we did bounce to 550, and since that bounce over 550, we are now trading actually over 552, gained a quick $2 just like that as some buyers stepped up at 550.
Pretty impressive there. Chipotle is sitting around 550, 167 is what I'm seeing right now. So a lot of action there. Want to move over to some of the names this morning that reported. Obviously, there were some big ones yesterday, but we got to knock out some of the names today as well. So going to pull up some of those. First off, I guess we can do MasterCard. I think that's probably a good one to start with. Mike Alpha, which I think goes perfectly well with having that we just interviewed somebody from MasterCard.
Right, and then yesterday too, Joe Gitz was also sort of in that space.
Keeping the payments out there, I guess. So get you the MasterCard numbers real quick. Shares are trading down this morning. Company did disappoint in its report. EPS came in at 57 cents versus expected 60 cents, while revenues came in at 2.1 billion versus expected 2.14 billion. We didn't get a whole lot of other data, so watch this conference call. This could get really interesting. Shares trading below $75. That's really what they've been fighting with. They initially dropped from a high of 81 all the way down to the low, high 73s, looks like.
73.50 I see was the pre-market low this morning. Yeah.
All right, and then it bounced up actually above close to 77 before coming back below that $75 level. So a lot of action around $75. It looks like that's where kind of the bulls and bears are fighting over, and you're getting some overshooting here. So Brent, what are you thinking of MasterCard here? Any thoughts on today's session? Obviously, we had some action at 73.50. I'd be interested to see what happens if we get back down there.
73. Yeah, that's actually 73.50 right on the nose. Joel and I'm sure Dennis love those even numbers, and that's going to serve as a bit of support here. However, 75 the $75 to $76 range was definitely a battleground this morning, and we have not been able to hold that up. Looks like we're going to bounce around $74, 75.03 at last check. 75 to 76. I bet there's going to be a bit of a consolidation range between 75 and 76, at least for a little bit here.
Yep, got to keep an eye on that. Keep an eye. I think this is interesting. On the 28th, J.P. Morgan maintained its overweight rating on the company while dropping its price target from $91.50 to $90. So J.P. Morgan's kind of hanging out to dry right now. I'd be interested to see if they change their rating on this after this earnings report, or if they maintain. I think they, if I was there, a reader of their reports and relied on them, I'd expect them to weigh in today. So it should be interesting to see if J.P. Morgan puts out a report on MasterCard on today's
Have
session.
not seen anything yet, I don't think.
Just got to keep an eye out for that in general. Probably midway through today's session or something along those lines. Let's see if I can pull up any of the other credit card companies. Looks like the charts are not cooperating with me right now.
I'm putting out a headline right now, just to digress for a sec, Jake. Putting out a headline on Mela Sciences right now. It's Mike Echo Lima Alpha. It's halted. You're not going to be able to look at the chart, but it's a bit odd to see a halt this early in the session. So just want to kind of note that for everyone. Heads up on Mike Echo Lima Alpha. Gonna have some news coming out on this one in a minute here.
Alrighty, just pulled up Visa to take a look at it after that MasterCard report at 217, so it's down a little bit today. What was our close yesterday?
Only $3 though. I mean, the move is much less outsized than the MasterCard move, and I mean, this is a bit of a divergence if you ask me. We got MasterCard shares down almost 7%, Visa shares down only about 1% or so. Usually these trade pretty closely, but remember Visa did just recently report, so any investor in Visa probably was trying to price that in on the day they reported, which was, you remember when that was, Jake? We pull it up real quick here. I believe it was on the 30th, so that was just yesterday.
All right.
Goldfish memory.
Well, that's what happens in news when you're just pounding out the headlines, making sure we get it to our traders as fast as possible. Another one I want to look at this morning is Chevron. Charlie Victor X-Ray is the ticker there. I'm going to pull that up on the charts real quick. They did report earnings this morning, and my charts decided to give me Citigroup. Thank you. Thank you so much. I don't want to look at that one right now. So Chevron EPS came in at $2.57, which was right in line, while revenues came in at $54 billion flat, missing expectations of $63.14 billion. So missing on the top line while matching on the bottom line. No guidance yet out of Chevron, but we do have shares coming down pretty hard here in the pre-market. Was at down about $4 there, almost $5 there. So what do you think of Chevron? I mean, I guess we could kind of contrast it with Exxon if we wanted to, which is X-Ray Oscar Mike. For anyone following along on their own charts, I'll pull that up on a different screen so I can kind of take a look at that at the same time. Exxon's down, Chevron's down, kind of trading together as a group. Any thoughts here?
And you know what? Chevron is trading, did hit a fresh 52-week low just now.
Wow.
111.44 I see as a new 52-week low, and we did gap open to 116.31. We're breaking down since then. Gap broke down through the 113 level. 111 could hold here, but there is just a ton of downside momentum right now in this name.
Absolutely, you got to keep an eye on that. Probably as far as market cap goes, definitely the biggest name this morning. But there were some other big ones. Take a look at Mattel here, the toy maker. That's Mike Alpha Tango. Gonna pull that up on the chart real quick. Oh no, not Applied Materials. Mike Alpha Tango. There we go.
Fat fingered.
Yeah, it's weird. This chart actually wants me to type certain things. Let's see if I can get it to cooperate here. But the company did report EPS of 78 cents versus 76-cent estimate. Well, revenues came in at 1.06 billion versus expected 1.05 billion. So some action there in Mattel as far as the earnings. It looks like I'm not gonna be able to pull that up. It's auto recognition is not exactly working. That's kind of weird. So I'll pull that up on a separate chart and I'll take a look at that. The company is trading down almost 10% here, with 10.72% is what I'm seeing, basically below the $40 level. So got to keep an eye on that. Company did miss no downgrades from the analysts yet on this news, and still watching out for some guidance from the conference call. So Brent, any thoughts on Mattel, the toy maker here? A miss on the top line and a miss on the bottom. I don't know. It's kind of a rough report.
I am looking at 38 level. 38.24 was low this morning. We're around 38.40 right now. $39. We did have a few trades over $39 in the pre-market session, but for the most part, 39 serving as resistance here. And Hasbro, a good one to look at if anyone's trying to make a pure play on Mattel this morning. Hasbro shares trading Actually, higher? No, that can't be right. Let's see. Hasbro's down a nice 4%. Not a nice 4% if you're a bull. If you're a long in Hasbro. Hasbro 48.50 last
yeah.
trade.
It broke below 48 very briefly there, but got to keep an eye on that. Definitely kind of a brutal trade going on there right now. As far as the last earnings report I got to cover, I mean, we're at 9:44 already. So we are at going to take a look at the local company Lear, which is Lima Echo Alpha. Auto supplier here. EPS came in at $1.55 versus $1.59 expected. Revenues came in at $4.26 billion versus expected $4.05 billion. So beating on the top, but managing to miss on the bottom there was Lear. Company hasn't released any guidance yet, but we are going to keep an eye on that, and there will be analyst reports coming. Now, keep in mind, this is the first time Lear has missed in, 6 quarters on the bottom line, but it continues to keep the streak alive on the top line. So barely managing to miss there is Lear, Lima Echo Alpha. Going to get you guys a price action update there. Unfortunately, my charts are not cooperating with me. Trading down roughly 2% here. Maybe going to test that $75 level even. I don't know. It should be interesting. Brett, any thoughts on Lear? And looks like we're testing that 75. Just saw a 75 print cross. So.
I just took my chart back to like a 30-minute chart, and the stock was trading pretty tightly between 76 and 77, and we have broken below that level. And on Lear and Auto Supplier, there are a ton of pure plays there. Jake, I don't know, we don't have much time left, but maybe if you could just list off some of those other automotive plays, automotive supplier plays.
Delphi is their primary competitor, which is DLPH, Delta Lima.
How about a little
Hotel.
TRW, a little Visteon?
Absolutely, those are big names. Huge in this area too, so we're used to contending with them. Do you want to finish up the show by taking a look at the S&P futures? We're sitting at 1769. Looks like we may be getting close to 1770. A little bit of action going on there. We did get a bounce below the 1765 level, so should be expecting to see some interesting action there today. Joel is still out for the rest of the show, but thank you guys for joining us. We'll all have the full team back on Monday. Hope you guys have a great weekend and a great trading session. We'll be back with you on Monday.